Hello and welcome to this Cesim Bank introduction for instructors. My name is Veijo Kyösti and I will be your virtual guide during this session. And the first step that we will do is to log in to the platform. And this can be done here at our homepage cesim.com. Now we are getting there, and then you click login. You have been given your own instructor details, email and password. You just enter these into these respective cells, and then you click login, and then you are entering the instructor area of the simulation. Now this instructor area allows you to create courses, manage the courses, change the deadlines, follow the student activity and so forth. We're not going to be spending time on this one right now. Instead, we will be going directly to the participant interface that we can access through the courses page. So typically what you find here in your instructor account is a test course with 3 or more teams. Each of the teams have X number of participants, and you can use this test course to play with your colleagues or make decisions by yourself. And you do that by entering the participant area. Now I've decided to go to the Shayla's account. She's in the green team. I just click her name, then I click this visit the student area, and now I have accessed the participant area as the participant sees it. Now here first we have the home page with that includes some information about the ongoing course. Then we have the decision section. We have the results section, and I will return to this very soon. Then we have the schedule page, and the schedule page then shows the schedule that you as an instructor create for your student. And you can have up to 3 practice rounds and up to 12 actual decision making rounds. Typical duration for the course is 1 or 2 practice rounds, and then between 5 and 7 actual decision making rounds. The schedule is completely flexible, so you can change the deadlines and add round, delete rounds at any point during the course. Then we have the teams page where the participants can see the teams. They can also change the team names. Initially the teams have these color codes, but the participants can change the team name by clicking this edit link. Then we find the readings page where there are the decision-making instructions and a brief case description, and then there is the forums page, which then has team forum for teams' internal correspondence, and then there's the course forum where the messages are visible for all the participants in this course. Now let me go to the decision area, and the first thing that we find here in the decision area is a market outlook. And this market outlook gives information about what is happening in the operating environment. Now this is important to read at the beginning of each round. Then the actual decision making starts here in the consumer section. And now first we find the deposits, and I should mention that the simulation has a lot of modularity, and this particular case that we are looking at here has almost all the different options enabled, including 2 different customer segments. So at each area in the simulation under the consumer business, we find both retail and private customers. Now if you feel that there's too many customer segments, then we can easily take out the private customer segment, so it leaves only the retail customers in the system. And on the deposit side, we offer to our customers demand deposits. And here the idea is that these gray cells are decisions and blue cells are estimations, and the same logic applies throughout the whole simulation. So for example here we are offering now 15 basis points interest for the demand deposits for the retail customers and 30 basis points for the private customers, and then our estimation is that our balance will grow by 20% from previous round to this round. And now you also find this kind of question marks in the system, and that always gives a glimpse of information regarding that particular decision. And now besides the demand deposits, we also have fixed term deposits. The logic is exactly the same, but these are just fixed for 12-month duration and 24-month duration. Now the next page here on the consumers is the credit products, and on the credit products we obviously sell money to our customers, and there we have first mortgage loans with two different reference rates, 12-month reference rate and 5-year reference rate. And again, we make this offer both for the retail customers and private customers. In case you don't want to have the private customers, then this column will disappear from here entirely. And then we make an estimation to these blue cells regarding the expected net loan growth rate. Then besides the mortgage loans, we can also offer consumer loans, we can offer point of sale credits, and we can offer credit card loans. And these products like point of sale credits and credit cards can also be disabled. So if you don't want to use these products, or if they are not relevant to your market, then these can be removed from the case management section. And here the pricing for the credits is done as a margin. So whatever you put here is gonna be then added on top of the reference rate, which we here call CIBOR, and for 12-month reference rate is 50 basis points, and 5-year reference rate is 90 basis points in this case. Lending terms we decide here, and for mortgage loans we have expense to income, loan to value, and maximum maturity. For the consumer loans we have the expense to income ratio and point of sale credit as well. And then in addition we have salary multiple for the credit card loans. We also make an estimated provision for the loan losses. The system will calculate the actual provision for the loan losses, but here we can make an estimation just in order to make our income statement and balance sheet match up. And then we can also make an estimation for the net charge off for each round. Now obviously, like the simulation operates so that teams are competing against each other. So when somebody has a margin 75 for the retail customers and another one is offering 25 basis points, then the one with 25 basis points appears much more attractive from the customer's point of view. But the price is not the only factor. The demand is also influenced by the customer satisfaction and also the employee satisfaction. So there are multiple different factors that actually influence the demand of the products that the bank is, or the services that the bank is selling. The one page here which is also optional is sales channels. So quite often this is actually disabled by the bank facilitators, but this links to the point of sales network. So if we have enabled the point of sales credit here in the pricing section, then it potentially also makes sense to include these sales channels, because here we can decide what proportion of the retail salesperson we allocate for the point of sales network, and what is the amount of cashback that we use to incentivize our customers. And then in addition we can also decide about allocating resources for different products. So in this case we have even split between deposit, consumer loans and credit cards, 33% for each, but we can decide that to follow another resource allocation as well if we want. Okay, that was the summary of the consumer section. Now I'm going to be moving to businesses, and here on the business customers, we first of all we have the SME banking, where we can make an estimation about the growth of deposits, and then obviously decide what kind of interest we offer to our SME customers for their deposits, and these are basically demand deposits, all of these. And then further on we decide about the loan terms or the pricing for the loans. And the SME customers have been divided in different credit ratings, and then we can do the pricing according to the different credit ratings. Here on the right hand side we can see what has been the offer previous round, and this offer now includes also the reference rate, which in this case is the 5-year SIBOR. Then we make an estimation about the growth rate, and then we make an estimation for the loan loss provisions. And the previous loan loss provisions can be seen here in this column furthest to the right. By clicking this here, we can see the loan portfolio previous round, and also what was the division between the different credit ratings in the market total. And then we also decide the other lending terms, so we can decide what kind of like lending terms we give to our SME customers. We have anything between no terms and covenant heavy. So if we are very aggressive and have no terms, then obviously we sell more, but with the likelihood of more bad debts. And then we also decide the real estate lending policy here from these 5 different options. Then we have some marketing decisions here where we can decide about the sector that we are targeting. So if we decide to target the domestic, then it means that we are targeting those companies that primarily operate in the domestic market. And then if we say we target export, we are then targeting those customers who mainly operate in the export market. And this then should follow the kind of business cycle. Sometimes the domestic market is doing better, and sometimes the export market. So from the bank's point of view, the marketing department should be awake and follow this targeting according to the business cycles. Then we also have a decision about what kind of products we offer. There's 5 different options regarding the like product or service offering that we have for the SMEs. Okay, now the next page that we find here is the corporate banking, and this is also optional module. So here basically we offer different services to the corporate customers, mainly to the large corporations. There are options between equity capital markets, debt capital markets, mergers and acquisitions, and then we can also sell like hourly based advisory fees. We can also decide how we prioritize these different offerings, and we make an estimation about the revenues, and then we decide how much money we will be spending in the promotion of these services. So all this is like service based fees, and the pricing is done as a percentage of the transaction value. Next page is the investments, and this whole investment module is optional. So it includes investment management services that we can offer for our clients. If this is not relevant for your particular course or training, then this can be taken out completely. But the services here include brokerage services and then the asset management. And now we do the pricing for retail customers for the per account per month, then for the premium services per month, and then we also decide what is the percentage fee that we take from the transactions. And then for private customers we can also decide the portfolio management services, where we have the management fee as a percentage of assets, and then we have the advisory services dollars per hour. And the rest of the decisions here are estimations about what we think will happen, and then all the way at the bottom we find some gray cells where we decide how much we invest in the promotion of these services, and we did make the decision separately for our retail customers and for the private customers. And as I mentioned earlier, if the private customer segment is disabled, then this whole section here will not be visible. The product page includes different investment products that we can offer, and there are in-house funds. There are 3 readily made funds, and then we have the option to create additional funds. The fund class between stocks and bonds, let me just pick like stock fund, and then there are different subclasses that we can choose, let's say value, and then we can decide the target market, and then we decide the fees. So this way we can create new funds here. Then we can decide about fund offerings through different partnerships, and then there's also the option to create these structured products. And as mentioned, this whole investment section, if it's not relevant, it can be disabled completely. Now we go towards the back office, where we first have the personnel decisions, and on the personnel decisions we decide the staffing for each of the different departments. So we have retail, SME, corporate, investments, products, and back office, and the amount of personnel will then influence the customer satisfaction. So the more you have people available, then the better is the customer satisfaction, but obviously you don't want to have too much, because that's going to increase the cost. Then we also estimate the turnover, and then we make decisions about the employee compensation. There are different options for the compensation policies, and then we decide the training program priorities, and then we decide how much training time per new employee and per old employee, and then also some decisions about what is the relations between the management relations and HR development. And personnel is a key element in this simulation. It has a big influence on the customer satisfaction, and this is not an optional module, so it will be part of the simulation with all the different configurations. Now systems then is an actual optional module, but now in this case it's enabled, and we decide about how much we invest in the development of the internet banking services, how much we invest in the development of the customer service processes, plus we decide also what kind of approach we have to the systems development. And all these different decisions, they have their impact on the demand, and they should be taken into account when we design the strategy for our banks. Then we move on to the risk management page, where we first of all decide what amount of money we allocate for risk management. Then we decide how many people we allocate to chase the potentially non-performing loans. So here we can allocate a number of people who are then going after the people who are defaulting or starting to default their payments. And then the next section here is the interest rate risk management, and here we have calculated the gaps between the rate sensitive assets and liabilities, and then you can use these swaps to hedge against the gap between rate sensitive assets and liabilities. And there is this question mark that gives you information about which kind of swaps they are and how they can be used. So this is a hedging element here. And then the last piece on the risk management section is the credit risk, and on the credit risk we have the calculation of the risk weighted assets, and then at the bottom we have our capital adequacy ratios, where the equity is compared to against the relevant amount of risk-weighted assets, and the same information is given here in this chart. And last page is the treasury. And before we go to the treasury, I want to show you that here we also have at the bottom bar we have income statement, which shows the situation for the bank as a whole. So we have the actual information for the previous round, and then we have the pro forma statement for this round. So whatever we see here in this column is based on the decisions and estimations that we have been making throughout these different sections. And then the balance sheet, same way, we have the previous round information and this round information. Then we have information for the different segments. We have the loan book, and then we have some parameters where you can find tax rates and other details that are part of the decision making process. Finally, there is the decision, sorry, now we weren't supposed to skip this treasury page, so we go to the treasury, and here the treasury On the asset side, we can invest in the other credit institutions' bonds. Then there are treasury bonds, and what is here called foreign bonds is actually not foreign bond because it's also nominated in dollars, but these are possible bonds where we can, destinations where we can invest if we have excess funds available. And then on the liability side, we have long-term bonds and subordinate debt that we can use if we don't have enough liquidity. The balance sheet is balanced so that now based on the current decisions we have a fair amount of excess reserves, which means that we have additional liquidity. This is earning 50 basis points for us. Now if we would want to invest this into treasury bonds, we would be able to increase this amount and invest part of this money. And then on the other hand, if we don't have enough money available, then we will start taking automatically loans from other credit institutions. If that's not enough, then we use the central bank credit facility, and if that's not enough, then we have to resort to the emergency liquidity assistance, which is extremely expensive. So the goal here on this treasury page is first of all to make sure that we have the liquidity and we have minimized the cost of funding for our bank, and then we can also decide to issue or repurchase shares. If we want to repurchase, we put a negative number here, and then we can also decide about the dividend payments. So these are the decisions on the treasury page. Then for the participants, we have the decision checklist, which is very handy when you operate in teams. In our example, we have 3 members. We have Sheila, Anita, and Marvin in the same team, and each participant can make their own decisions. Here these 3 participants, they can make their own decisions, and then before the deadline they can discuss and share ideas about what decisions they should be using as the team decisions. Now if we assume that we want to use Sheila's decisions, we click this copy button here, and now the system is going to move all the decisions from this column to this column, and then whatever we have in this column at the time of the deadline is going to be used to calculate the results. And often it happens that when the teams they work on the decisions, they find that one set of decisions is quite good and they can use that as a base, but it's not the final set of decisions. So in that case they can still click this go button and start modifying the decisions that they have copied over to this column. Anyway, as said, now the decisions that we have here are used to calculate the results, and then the results will become available under the results section. And here in the results section we have a very comprehensive set of different results that are available. There's a summary which then outlines some of the key indicators. The typical winning criteria, by the way, is this TSR, which is total shareholder return. So that is taken into account both the share price development and dividend payments throughout the rounds. You as instructors, you can obviously decide to use other winning criteria as well, but this is the one that is quite commonly used. Now during this session I'm not going to go through all the different reports, but you will be able to find all the relevant consumer data, business customer data, investments, personnel, and all the rest under this section. And under financial we have the different ratios and valuation details as well. Now the results can also be let's go back here. They can also be downloaded as an Excel file. There are some slides that can be opened, and then they can also be printed if absolutely needed, but this obviously we don't recommend. Alright, now we have looked at the decision area, we have looked at the results area, and that concludes our introduction to this simulation. Those of you who are interested in other languages besides English, you can find not all these languages are actually applicable to this banking simulation, but there are several languages that are available, for example Spanish, Chinese, and some other languages that can be used for these banking simulations. But please get in touch with our account managers when you want to know the availability of the different languages. I'm gonna stick to English for now. Okay, very good. Now we started through this instructor interface. Now you have your own instructor account, and if you don't have one, then please write to us. You find all the contact details on our website, and we'll get you set up with a trial account very quickly. I say thank you, and have a great day, and hopefully speak to you later. Bye for now.